Good morning, good morning, good morning. Here we are again. So buttons. I'm just trying to gather my thoughts. Got up late today. Actually, it took some time too. I was watching Gottlieb on CNBC. I really respect that guy. Intelligent guy, good businessman, and just knows how to paint a picture so you have a good understanding of what's going on around us. And it was interesting because he had said that he feels that this variant is going to burn itself out in 3 to 4 weeks. So they're already seeing, they saw a huge drop in cases in South Africa already. And they said a couple of months more probably won't be detectable. So it's interesting how this is just ripping through the community and burning itself out. So the evidence is in. The effect is much less severe on the fully vaccinated than it is on the unvaccinated. And by definition, fully vaccinated is two shots of the mRNA, and and yeah, I think I got that acronym wrong. And the third being a booster. So whenever you hear them talking about fully vaccinated, that's the formal definition. You had the two shots, not necessarily the booster. And I've been holding off on the booster myself. I think I can get through this. They're also showing that the symptoms are a little less severe in those that aren't vaccinated, a little more severe, rather, in those that aren't vaccinated. But it's not the end of the world. It's not killing tons of people. And the immune compromised or comorbidity issues obviously have a harder time with it. So it's some good news, or at least some good insight into this variant and what to expect. But the holidays are coming, man, and I wouldn't go anywhere with folks who are not vaccinated. Everybody's probably going to live through it at the party, but they're going to be carriers and more contagious than the fully vaccinated, and even the fully vaccinated are carrying it. So if you could handle a few days off from work because you're sick, then party up. Otherwise, just be careful and protect yourself. So the markets are easing down once again, and it's tech dragging everything down. I'm looking right here on the screen is the daily uh, um, uh, futures for the S&P, and it looks like we broke the low of yesterday's futures. Yeah, man, by like 10 points. We're down 20 points, so let's just jump over to our SPX and see how that equates to our XPX. We're down 20 points. We closed out our lows too, so that's a drag. So we're probably going to make a lower low at the open unless we trade back. I know it's kind of late time. It's 7:30, so yeah, we still have a few hours to trade back. We closed at 68. We'll probably open down at about 48. And that even puts us below. Is that Tuesday's low? Oh, what happened here? Oh, well, isn't that lovely? Everything froze. Oh, okay. Looks like we're back. Okay, so yeah, that puts us below Wednesday's low. That's a shame. Everything we gained on Wednesday we're giving back. Oh, and that's my 30-minute chart. All right, so ignore the past 3 minutes. Yesterday's low is 51.48, still puts us below yesterday's low, and we're still above the low of Wednesday. So that's somewhat encouraging. If we look at this, we got a bearish divergence. We did close that gap. I don't know. I'm thinking we test the 50-day, which is 601. And then really I have this trend line right here that I'm looking at support. Yeah, and that's like a good support. I'm saying 546 is like support, somewhere around there. I hope we don't test it. I'd like to see some buying go in. It's just tech dragging us down. Everybody wants to get out of tech because they know interest rates are going to start easing up. And I think that's a little rash, you know. I don't know if they're going to be as aggressive in raising the interest rates as everybody's anticipating. And I think, that dot plot, everybody's looking at it now, and I think they're talking about 3 raises in 2022. And I don't think so. I just don't think so. I think that it's going to be a shocking rebound in inflation. Unsubstantiated opinion. So, I mean, that's just my view. I think that this sell-off in tech is going to be way overdone. I think it's still going to be a low interest rate environment, good for technology. And really, even if they raised it twice next year, that's still a low interest rate environment. The other issue we have is the buy now, pay later issue, which is zero interest on those things. It's hard to understand, but it's like systematically people are not paying those bills and taking the goods and you know, doing what they can. So now I think Consumer Affairs is looking into that. But anyway, I digress. We're obviously pushing down right now. And going into the weekend, I don't know. I'm thinking it's going to be more of a flat day. I would hate to see a sell-off, and I don't like putting myself out there, but it's kind of feeling like a flat day. I really can't see where the market is going right now. We closed down 20. I mean, I can't see the pattern it's attempting to build. I mean, other than this inverted head and shoulders. Just can't call it, man. Just can't call it. We'll probably tag that 50. Let's see if that 50 holds. That's the best we could do. I mean, that would be an aggressive move down. That'd be like a 60-point move down. We'll see how it works out. I mean, we did have a 40-point move down, and we did trend higher for the day. You can see a higher low and a higher high. So today, we're definitely going to put in a lower low, at least as the market stands right now. Maybe we put in a lower high, and then we have 2 or 3 days of a down move. That could be entirely possible, or it could be an engulfing bar. Just can't call it, man. I'm just going to watch the market and take my intraday trades as I see them set up, and hope for the best. Hope. That's an excellent trading plan. All right. Well, I appreciate everybody stopping in. Hit the subscribe, hit the bell, hit the likes. Goes a long way. Should have said that in the beginning. But everybody be calm, be cool, trade in peace, and good luck trading.